Okay, so fading, generally speaking, is your bread and butter type of scalping trade, right? You're looking for those pushes, those pulses. We talked about if you can kind of extrapolate existing moves, distance from VWAP, double tops, that kind of stuff. Looking for the stretch to fade to come back. Mean reversion is normally the scalper's best friend for the majority of the time. However, there are some times when you're going to have to flip to a trend environment specifically and start to follow the move. And also, let's just say this, guys, that there's no hard and fast rules. You've got to make your own rules up for your own trades. So you may say to yourself, okay, I'm going to follow. You may think you're in a range bound environment, but the range is quite big, in which case there's meat to be made following the move until the end of the move. Now, if you think you have the skill to be able to do that, then by all means do that. But if you think, okay, well, I'm going to stay fading highs and fading lows and looking for those lows, then do that. So there's no kind of, you must definitely do this. It's all very, very personal. But one thing that is probably better to do in a specific trend type environment is to say, hey, you know what, I'm not going to start fading moves. It's obvious at the moment, which could change. At the moment, we are pushing to new lows, we're pushing to new highs. There doesn't seem to be any respite in this supply demand imbalance. So I'm going to align myself with that, and I'm going to sell pullbacks. If we're in a downtrend, I'm going to buy pullbacks, an uptrend, and I'm going to scalp them out as we push new highs. So generally speaking, that's what you're kind of trying to do. So if we look at this, again, using the DAX as an example, just because it's one of my favorite markets to day trade specifically, but this is a kind of a couple of days earlier, and I've not gone back and cherry picked specifically, and appreciate, I know you're going to hit it in the comments, guys, about this being hindsight, but we're just guiding here using this chart. And yes, it is hindsight, and I'm going to try to, look at stuff objectively and say, okay, this is exactly the way that this is the way you probably would look at it. This is where you might get stopped out. This is how you could position, but we're just kind of using it so we've got a benchmark to work from. So let's just see what's going on. So we've had a drive up, and at the moment you're kind of pushing up. You think maybe it's a strong uptrend. So perhaps you're either looking to wait until it settles down, maybe looking to fade highs, maybe looking to buy highs, whatever it may be. And at this point, up until here, I would say it's still not clear, right? You might still be in fading highs and lows mode. You might still be in mean reversion mode. You might have extrapolated out that distance there, and you've gone, all right, so if this is a reference from the previous video, if you've not checked it out, go and do so. You say, okay, that's about 40 points. Right, so what's that there? It's about 40 points, and you start to see it congesting. So you might well fade that. You might say, okay, well, I think we're going to sit in this kind of range. It's 80 points so far, let me fade it and look for longs. Now, if you started doing that, of course, you're probably going to get stopped out as it pushes to lows. Fine, there's no problem with that. That's what it's all about, it's managing risk. However, as we start to go through the next 30, 40 minutes, it becomes clear or clearer. You never know for certain. There's no way you can definitely say it's definitely going to be a trend day. If you did, you just put your full net worth on the short and go away and come back and say, great, I've trebled it. Doesn't work like that, but you're taking as many hints as possible, and you say, okay, well, listen, we've held at lows here, and we've kind of flagging at lows, and we've got grinding and grinding lower. So at the moment, we're not rotational, right? You may well have had a profitable trade, maybe you've had a couple of losing trades, but now you've taken stock of the situation, reevaluated and said, okay, we've shifted from kind of pushing to highs, pushing to lows, looking like it may be rotational type market day to being a trending type market day. So I need to now stop trying to fade the market, and I now look to have to follow the market. So I need to wheel out anything that might help me with that, which is going to be selling spikes, it's going to be selling pullbacks, it may be selling into new lows. Personally, I'll only do that when it's very, very aggressive. So if you're pushing into the close or something like that, I'll be very cautious about that, especially during the middle of the day. But if you're selling into resistance, selling into highs, aligning yourself with the trend, that's kind of how you will position yourself as a scalper. So you might sit there and say, okay, we're pausing at highs here, and this is the sort of thing that you'd probably get on, right? You'd probably say, okay, we're holding at lows. We've shown no real strength or attempt to even push back up to a VWAP here. When we see little spikes, little wicks, little tails, that's your opportunity as a scalper to say, okay, well, the short-term demand, supply demand imbalance has shifted. Let me sell that into fresh loads and scalp out something like that. This may be too grindy. This may be too grindy. It pushes back up here. Maybe you start seeing a little double top here and you scalp that to lows. That's the kind of thing you're looking for as a scalper. Same here. Maybe you get short as it pushes up onto that resistance. resistance and you have to scratch it out because it doesn't go any lower. Again, maybe you get short again, you have to scratch it out for a few tick loss or a few tick profit. You probably have a few goes at that, and at the moment you're okay because you're kind of just grinding away, and then maybe you have one more little nibble and that one gives you a nice 15-20 tick move, and you play it like that because there's still no evidence to suggest, you know, your theory, your brain would be, your kind of self-talk would be saying, okay, well, I've got my resistance there, I need to stay aligned on the short side of this, scalping shorts only under whatever premise you've got until we break above that and hold above that. That's the kind of thing you'd be looking for as a scalper. And then as you kind of push the lows here, you're probably sitting there, maybe, this is why I'm very cautious about selling into fresh lows when we're not really aggressive, because if you're selling to fresh lows here, you're going to get hammered when it pops back up, and you know, more often than not that's what's going to happen. Now later on that may well come into play, but kind of in the middle of the day you've been a bit cautious about that. Following is not necessarily about selling fresh lows or buying fresh highs. It's about aligning yourself with the trend and waiting for the trend to unwind a little bit before getting on the short side, scalping out as it comes into fresh lows. It's far better, generally speaking, to scale out the position as it pushes to fresh lows than it is to sell into fresh lows. Most of the time, that's not always the case, because some of the best trades happen to be when you're driving into new lows and you're hammering more shorts into lows under certain conditions. But the majority of the time, guys, it's a case of, okay, fading out into those stops, because most people have their stops there. So you want to be the person who's feeding it into the stops. All those kind of sell stops that are hitting the new lows, that's causing that little downdraft. You want to be covering your shorts into those the majority of the time, especially as a scalper when you're not looking for those home runs. So you're still aligning yourself with the short, you're looking here, maybe you're kind of hoping for some sort of little pop. This may well be not enough of a pop for you, and you might be sitting with this all this going, well, this is no good. But the point is, you're not trying to fade anything yet. There's nothing to say I want to fade it. The only time you're going to start fading it is when you start seeing some sort of strength. So even this is weakness, but then you start seeing this. So you might say, okay, well, I'm not going to follow the trend now because it looks like we could be rotational. Now, I recognize we have got hindsight here. We might be saying, all right, this could push to lows, and I would probably myself have taken a short on that, and whether I held it and pushed looking for new lows, that may well be something from a day trade perspective and have been stopped out with this ultimate drive higher, especially with it being so weak. But if we're looking at following the market, you want to see evidence of the market being weak or strong, and then aligning yourself with that trend and scalping on any slight moves back. So scalping pops up to the upside, scalping kind of little attempts that fail. You know, this would be a perfect scalp. This would be absolutely perfect. You know, you've pushed the lows, you push back up, and you start to get short on this, but it didn't work. You would have had to scratch that out. This kind of thing's another one as well, taking so long to push back up what took 3 minutes to drive down. That's telling you a lot of stuff. Now, is there a spike to sell into? Not so much. You probably, if you're a super cautious scalper, you're kind of waiting for that spike that doesn't come and it rolls over, and that can get frustrating for you, especially if you're not wanting to sell into lows. But at least you're aligning yourself, and it's much better, guys, missing trade after trade after trade than it is taking loser after loser after loser. I prefer to have really, you know, tight constraints around my trade than I do just to let it go and to be taking losing trades. When we start to see this kind of strength, at this point here, this is where you go, right, okay, maybe you've kind of stuck short with it and thought that was a longer rotation back, and you're kind of still scalping on the short side, maybe taking some hits on that. At this point, you've got to change your mind and go, okay, I need to either be looking for a pushback at the highs, or I need to be, you know, trying to fade a spike up from the VWAP, or I need to be, you know, aligning myself slightly differently, thinking a little bit differently about the trade. So the key point that I'm trying to put across is looking at what the market is telling you in a moment in time. Scalping is very much grabbing that short-term price momentum and fading it or following it. Now, when we're talking about, even though I've split this up into fade and follow, ultimately as scalper, we're always ultimately trying to get on the end of a little stretch and pull back in one direction. The key difference between the fade and the follow is that we're using everything like the range. We're looking for how much we've moved, how distance we are away from the highs, from the lows, and we're saying, okay, I'm going to align myself with the trend, or I'm going to trade purely counter trend. We're always fading moves. It's just whether it's within a downtrend, we're fading pop-ups, or we've moved down and we're actually fading that for a push back up to the mean. That's the only difference. As scalpers, we're not, generally speaking, I kind of repeat myself because I said at the beginning, generally speaking, we're not really buying breakouts or selling into lows unless we're at the end of the day, for example, and it's been super aggressive, it's already unwound and you're just looking for hammer into fresh lows into the close. That kind of thing would work very well. Or at the opening drive, buying an opening drive, selling an opening drive to the lows. That kind of thing is fine, but normally we're looking for little kind of unwindings before we look to fresh lows. So that would be the way we'd fade stuff, guys. There's this, sort of the way we follow stuff, guys. There's a distinct difference in how we approach it. And personally, I like to align myself with one or the other to avoid confusion. Now, just very quickly, and we'll talk about this in another couple of videos, but the key is really to have the clarity with scalping is to have a thesis, have a hypothesis, and stick to it until the market's proven you wrong, and then you can flip it and say, well, actually, you know what, I should be aligning myself with the long side. I've been shorting it and it's been wrong. Now, are there going to be days where you'll just completely out of sync? Yes, there are, and that's when risk management comes in to stop you doing any damage, because you could be doing long, then you flip to short, then you flip to long, and you're just permanently one step behind the market. It happens, guys, it's trading. But when you're in the tune with the market, it works beautifully. You're like, okay, I'm aligned long, scalping from the long side, it's looking great. Now, okay, we're neutral, now I'm waiting. Okay, now I'm aligned short, now I'm staying short, now I'm staying, you know, and you can move with the ebb and flow. Doesn't mean every single trade is going to be profitable, no, but it's easier to align yourself with one direction when you've taken all that information in than it is to kind of flip back long and short. And that's just a personal preference, guys. I know from experience, if I'm trying to trade long and short, let's say push into a low, right? And I think, okay, it's going to drive through the low and then it will pop up. If I'm looking for the short through the low, then I might miss the actual bigger trade from the pop up. If I'm looking for the pop up, then I might miss the trade from the short from the low. So I'm going to have one or the other, okay? I'm going to trade that drive into the low and I'm going to come out and that's going to be it. Or I'm going to wait for the low to form, look for the exhaustion and look for the buy for it to pop back up. That just makes things clearer in my mind. So if you're kind of into scalping, maybe, or find yourself kind of struggling sometimes, that maybe just try to align yourself with one direction or the other and scalp on that side of it.